11 days ago, SpaceX pulled off the single biggest IPO in the history of the stock market. $75 billion raised, a $2 trillion price tag. Elon Musk became the world's first trillionaire before lunch. And then, almost immediately, it started falling apart. In 3 trading days, SpaceX shareholders watched roughly $600 billion evaporate. That's not a typo. 600 billion. Gone. Enough to buy entire countries. So here's the question I want to answer in the next 8 minutes. Did Wall Street just expose SpaceX as the most overhyped company on Earth? Or did they just hand you the buying opportunity of the decade? Stick with me, because the answer is genuinely surprising, and the part most people are getting wrong is right at the end. Let's rewind. June 12th, SpaceX prices its shares at $135 and opens trading at $150. The demand is insane. The stock rockets, pun fully intended, up around 50%. At its peak, it touches roughly $200 a share. For a brief, glorious moment, SpaceX is worth more than Amazon. It blows past Microsoft. Musk's net worth crosses $1 trillion. They literally minted thousands of new millionaires overnight, employees who'd been sitting on stock for years. And then gravity showed up. Wednesday, down 5%. Thursday, down another 3.5%. Then Monday, boom, down 16% in a single day. Added up, and the stock cratered nearly 24% in 3 sessions, briefly dropping below its debut price. The average person who bought in after the open, almost completely underwater. So what spooked everyone? 3 things, and this is where it gets interesting. Here's the uncomfortable math. At its IPO valuation, SpaceX was trading at roughly 94 times its sales. To put that in perspective, the most expensive stock in the entire S&P 500, Palantir, trades around 67 times sales. SpaceX priced itself richer than the richest stock in America. And remember, this is a company that did about $18.5 billion in revenue last year. Impressive growth, up 33%. But to justify a near $2 trillion price, the bankers had to tell a story. And what a story it was. They argued SpaceX's total addressable market is basically the entire US economy. $28 trillion. That math only works if every household on the planet signs up for Starlink, and if SpaceX captures an enterprise software market 30 times bigger than the one that actually exists today. If you value the company the boring way, adding up its 3 businesses, even giving each one double the multiple of its competitors, you get to about $1 trillion. Not 2. That gap is exactly what the market just slammed shut. But hold that thought, because reason number 2 is the one that actually makes this risky. Here's what a lot of headlines glossed over. In 2024, SpaceX made a profit about $800 million. In 2025, it posted a net loss of nearly $5 billion. And in just the first quarter of this year, it lost another $4.3 billion. What changed? 2 letters, X, AI. SpaceX bundled in Musk's artificial intelligence ambitions. Of the roughly $21 billion in capital it spent last year, almost $13 billion went into building AI data centers, more than it spent on rockets and satellites combined. They've been signing multi-billion-dollar compute deals left and right, so when investors bought SpaceX, a lot of them thought they were buying rockets and satellite internet. What they actually bought was a profitable space company with a giant cash-incinerating AI startup strapped to its side. The market is still trying to figure out how to price that, and uncertainty in finance means the price goes down first and asks questions later. Now the third reason, and it's a little spicy. Most IPOs hand maybe 5 to 10% of shares to everyday retail investors. SpaceX offered up to 30%. That is a deliberate choice. Musk knows the playbook. The same loyal fan base that turned Tesla into a phenomenon was always going to pile into SpaceX. But that cuts both ways. A stock driven by hype is a stock that swings hard in both directions. And there's a governance wrinkle. Musk controls roughly 85% of the voting power and holds the CEO, CTO, and chairman seats. Effectively, he can't be fired. For believers, that's the visionary staying in control. For skeptics, it's 0 checks and balances. Layer on the backdrop. Interest rates are high, bond yields are flashing red, and when money gets expensive, the first thing investors dump is exactly this kind of speculative, profits are years away growth stock. SpaceX didn't crash in a vacuum. It crashed into a nervous market. So that's the bear case, and it's strong. But if you stop here, You're missing the entire reason smart money is circling this dip. Let's talk about what's actually underneath all the noise. Because one part of this company is a genuine monster. Starlink. It's already about 60% of revenue. Over 10 million subscribers across 160 countries. $3.3 billion in a single quarter, with operating margins around 36% and effectively no serious competitor on the planet. If Starlink were spun out on its own, it would be one of the great businesses of this era. Full stop. Then there's the moat almost nobody can replicate. Launch. SpaceX doesn't just launch satellites. It launches most of the world's payloads, including for its rivals. With Starship coming online, the cost of getting to orbit could collapse. And whoever owns cheap launch owns the next era of space. Direct-to-cell phone service, satellite broadband everywhere, and yes, that controversial bet on data centers in space. And here's the kicker the panic sellers ignored. SpaceX is sitting on roughly $100 billion in cash. That is a war chest. Companies with $100 billion in the bank and a monopoly-grade core business do not simply disappear because the stock had a rough week. So let's bring it home. The crash wasn't random. A 94-times sales valuation, a $5 billion loss, a giant AI gamble, and a meme stock structure colliding with a jittery market. Of course it pulled back. But here's the part most people get wrong. A stock falling is not the same as a company failing. The drop didn't break SpaceX, it just repriced the hype back toward reality. The rockets still fly, Starlink still prints, the cash is still there. The real question was never, is SpaceX a great company? It obviously is. The question is, what is it actually worth? And the market is, painfully in real time, trying to figure that out. That's not a death spiral. That's price discovery on the most ambitious company humanity has ever taken public.